Okay, so what have we got yesterday? Let's have a look at the daily candles. Okay. Interesting. So we closed underneath this daily level. We had a reaction from this daily level. So we have two daily levels at the moment in this range. Where's my levels? Those lower ones. Time frame levels. There it is. Got this weekly level here, got this daily level here, which has been tapped. And then you've got this one that I was interested in yesterday, which is now tapped. You've got this one higher up. And then you've got this one, which yesterday's daily candle closed underneath that daily level. It's obviously a wash level, but it's a clue. You have a reaction from this one, but you close lower than 50% underneath this daily level. I think the reaction at the bottom is bullish, but actually in the context of closing underneath this 50% mark, underneath this daily level in the highs, it's probably quite bearish. It's probably quite bearish. If this was somewhere in the lows of a range of a downward move, I think it would be probably more bullish, or bullish even, just because of the reaction. So I'm not quite fond of this reaction, and I'm feeling a little bit bearish right now. This daily level is now obviously cleared and washed, so I don't think it's relevant. Let me have a look. Not really relevant. You can see how the price doesn't respect it. So I'll delete that. And then obviously yesterday we had this untapped daily level, and that was relevant. And what you see is the price went down to touch the weekly level in the previous bull market, all-time high, and then we had a reaction. Okay. So I've been tracking this on the local price action for ever since it formed, and my initial idea was either a megaphone, okay, or a diamond. So I had two ideas in my thought process: a diamond or a megaphone. If you overlap them, that's the megaphone. This is the diamond. And I think for continuation on the megaphone, we should have gone up by now. So I would say, to all intents and purposes, the megaphone is not necessarily valid at the moment, or it's not invalid, but it's not valid in the sense that you'd expect a push up now, or maybe we'd go down and then push up. I don't know. I'm not fond of the megaphone anymore. It's not great, but I'll keep it for reference. And then the other idea that I have is this harmonic idea that I'm thinking about still. So where is my harmonic? Here. So we have a little bit of a harmonic potential. Now, you don't really trade the C, you trade the D with harmonics. You wait for them to complete, then you trade the completion. Okay, so if we get a move down and we come down to, by the 5th or so of April, we're down here, and we take out the liquidity from this low here, and then we come back above this previous low like a swing failure, then you'd have a really easy invalidation and you could take the trade, and you're probably pumping, but it's looking like a bullet. This is a bullish harmonic. Yeah, so you could take the short, but the reason why you wouldn't necessarily target the low because you're trying to still get through a lot of support lines. And so at any point in time, the price could easily find support anywhere, really, and go right back up. Yeah, it's always possible for that to happen, always possible. So that's why you don't necessarily trade the C, you wait for the D. Okay, but if you do trade the C, then right now you'd have a slightly wider invalidation up to the C point, and effectively that's your trade. Yeah, that's your trade. You don't have the great ROI at the moment, but if it does move to the downside, then your ROI is off the charts. You know, you have a really good ROI. It's a 1 to 6 based on that invalidation. But the thing that I'm saying is that it is possible to find support. You're still okay, potentially to a 1 to 2 with a wide invalidation. The idea would be, it'd be better to try and reduce the invalidation in your trades. That's a bit too wide for my liking. Yeah, because if the price does start pumping now, it's gonna be terrible for if you're in a short. Okay, just see where that was before. Oh, it was up there. So let's just keep an eye on this harmonic. So, and then we'll go back to what I was originally thinking, which was this diamond pattern. Before I go into the diamond pattern, let me just see if the volume has changed in this range. So I'm going to do a volume pool. I'll get my volume levels out. Point of control, same place. Value area high has moved up, bizarrely. Maybe because we're on the 30-minute time frame. Let me go a little bit higher to the 2-hour time frame and see if there's much of a change. Nope, the volume area has moved up to there. Value area, so the volume area is widened a little bit. Point of control is exactly where it was. High volume node is still there. We're above it. Not much real difference. Putting a little bit of volume up here, but not much. So that's that. Let me hide that. That doesn't really help. Get rid of these fixed ranges. Okay. Going back to my original idea, which was a diamond. Once you put in your 2 pivots, there's your higher high, that's your lower low, and now you're trying to make lower highs and higher lows. So I had this trading plan from yesterday. I took the trade actually, and I took my profit already. And basically what I was looking for was a reaction. I didn't catch a falling knife. I don't do that. I did think that it would potentially go lower than this swing failure level here. Than here. I thought it could go lower, but I didn't catch that price action. I let it do its thing. And then as the price started to reverse, I was looking for an invalidation. And so once we put in this candle here, this 30-minute candle with a wick, that was my invalidation, and I took a long as the price was coming back above the SFP level. on the lower time frame. As you see, as the price is coming back above it, that was my trade. I took it, and it's basically that was my 1%, risk 1%, and I risked a little bit less actually, and I took my profit this morning as it went up into that high. I took my profit, and that was a successful trade, just waiting for the right circumstances. So the trade idea was correct. You see how I had this idea that potentially it will go lower, it would come above, it will come under, and then it will go up. So it kind of did that. Maybe it did it a little bit condensed in terms of timings, but it doesn't matter. The idea was correct. And I do have this going up a little bit higher. I'm thinking higher still. I'm not thinking we're just going to go down now. So that long is done. It is looking a little bit like a head and shoulders pattern here. We have had a swing failure here. That's so shorts have loaded up, and I'm still thinking a little bit higher. I'm thinking higher because I want to short up there. Mainly because there's some single prints I think need to be filled, and then I think it would be good to go up into this naked session point of control, kind of get a rejection from this higher range, take out the liquidity from this pivot over here, potentially put in your lower high, and then make your way down. Potentially tomorrow start making your way down, and tomorrow would be the end of the month. That's what I'm thinking. I'm thinking higher right now. I'm not taking a long because I'm already in a long. The long is a runner, so if we do get up there, I'll probably close my long and I'll be looking to short. Again, the same idea. I'll be looking for an invalidation first. There is a nice pivot there, so if we do get a swing failure into the naked session point of control, into these single prints, I think there's a good short potential there, and that will be a nice short. So I think I have an alert anyway. So that's my area of interest for a lower high on this diamond idea. Good morning, Sebastian, welcome. Thank you for joining me. And that's basically it. I'm not thinking higher right now. So my trading idea is a short here at the end of the month, breakdown, and I'm looking for a long over here, down here, and to reject this diamond pattern, because it's a bearish diamond pattern, because it's forming in the highs, to reject, and the rejection would be this. You've got this triangle back test, and you've got the volume range point of control. Mixed in there, you've got some single prints, okay, and we don't have any higher time frame levels, unfortunately. Maybe to touch the bottom of this megaphone idea still, maybe it's still in play, maybe it's a little bit more prolonged, and then you go in there and you push your pump. Now the question is, can you get through this previous bull market all-time high, or do you get a rejection? Yeah, that's the question. Because if you pump after you come down here and you get back into the previous bull market all-time high, you get back into this local range here, then you invalidate the diamond pattern, and actually this becomes extremely bullish, and you're heading up. You're heading right up to the top, and probably probably heading to an all-time high. Okay, if this was to reject, if this diamond pattern was to fail, I would, and we pumped and we were able to reclaim this previous bull market all-time high, then I would expect a pump all the way to new all-time highs. That's what I would expect. And then the question when it comes to this, do you get a rejection off the top of this like that, or do you just kind of keep on going, you know, because it's a megaphone effectively. That's effectively a megaphone. If you go from a low to a high, yeah, after you've invalidated the bearish pattern, that's really bullish. How does that fit into the idea of an ABC on a corrective move? Well, let me just put these into my diamond idea here. The trade idea is here. This is the trade plan. That's gone. This is all gone. I can clean that up. And I'm still looking to short higher up to today or tomorrow. Probably tomorrow. Maybe tonight. Who knows? You could short up there. And then if you're breaking out on the diamond, you're longing up there. Get rid of all that now. And then possibly a short over here. If you get a rejection after you bounce off the point of control, if you see a reaction and it rejects the weekly level there, you could, that's a short there as well. But you'd have to see the price react, get a clear rejection, so you have an invalidation. So it's all about having an invalidation. Once you know you have an invalidation, you can take the trade. But I think this is quite a good area of interest down here. Let me just get rid of this stuff so it's not. Put that into there. Yeah. Let me just go on the out and zoom out a little bit. I'm not sure if there's any fib lines. Let me just check. Kind of golden pocket off this pivot here. Kind of, not great. Yeah, maybe off this pivot here. There's a pivot here, you see. You could if you do a fib pull from that pivot. I'm just gonna use the magnet tool to get it there accurate. See, that kind of comes into the golden pocket too. So there's a lot of potentially a lot of confluence into that area of interest. And I'll be looking for a long there. And if we get a really strong reaction, then we're heading to the top of this potential megaphone idea that I have. And then let's see, because by the time it gets there, that'll be a new all-time high. Do you get a rejection, which will be a swing failure? That will be a short idea. Or do you get continuation? Right, that's kind of what I'm imagining right now. I am thinking a little bit higher today, potentially. Why am I thinking higher? Let me explain. Let me just sort this out so I have it clear. So short phone, megaphone. That's fine. What's that one? I'm trying to keep that. Get rid of that. Get rid of these now. Okay. I'm thinking a little bit higher now because I can see some very strong bullish divergence on XO charts. Let me just pull that up and show you. This is the 5-minute time frame, but you can see that as the price has moved up, you can clearly see that your CVD, which is market selling, has gone down. The line has gone down. That means market selling is being absorbed. There's an absorption there. Ever since we dropped down into the previous bull market all-time high and bounced, we've just been making lower lows on the CVD, and we've just been making higher lows on the price. Yeah. So despite all of the market selling, the price keeps on going up. So what's happening is you have absorption. We're getting absorption on the price. And so I am still thinking higher at the moment. It is looking like a head and shoulders. So maybe shorts are loading up. And what you can also see is in this is the rise of price. You can start seeing the OI is kind of going up a little bit. But when you do on closer inspection, it's actually when the price is declining. You see that? So even though on average the OI is going up, when you're looking at on closer inspection, you see the OI is going up, the price is declining. So actually shorts are being absorbed. So I kind of have this thought that maybe we're going to get a little bit of a short squeeze first for higher prices. That's what I'm thinking right now. You see how the OI is going up, the CVD is going down, the price is going down. So people are shorting in this range, in this decline of price, and it's being absorbed. You're getting higher lows. So I'm feeling a little bit bullish in the local time frame. So I am thinking a little bit higher right now. And maybe we just push up for me to get the opportunity to short that rise in price. That would bring us to that. That would be that. And a golden pocket there. Let me just make sure that those are accurate. I can get rid of this one now. And this one, I'm looking for the golden pocket. Let me just make sure the pivots are put in correctly. Yeah. So yeah, that's kind of swing failure that high, golden pockets, pocket, and some single prints there. Fill the single prints. You've got a session point of control as well there. There. So just wait for the reaction and then just take the trade, and then hopefully that will complete the lower high on this diamond formation, and then we're heading right back down. And then now probably I'll be targeting down here. Actually I'd be thinking let's go down to the point of control, probably, because you know I may not be aggressive with my profit take. That's my point. Good morning, Zahid Shah, welcome. As I was explaining slightly earlier in this update, if we do go up and get a rejection, then I'll be looking to come down to here where I've got these single prints, where I've got the point of control. The point of control right now is at about 67,230, and then if we do get there, I will be looking to take a long. Okay, and I've got, it's an area of interest of mine, and maybe we'll pump up after we come down there. So I won't be holding my shorts beyond the point of control, and I'll be looking to take a long. I'll be looking to flip that into a long once I see I have an invalidation, something like this, where it goes down and then you have a little invalidation. Then I'll be targeting the all-time high. That's kind of what I'm imagining. If I see the price come up and can't get back above this previous bull market all-time high, and you just find resistance and you get a rejection, I'll close my long and I'll flip short. Yeah, I won't hold my long. That will be it. And maybe I'll take profit there anyway. Okay, maybe I'll skim some profit right there just in case that happens. So that will probably be my first take profit. And then if I see a rejection there, I'll probably flip short, because effectively what's happening is you're just coming in to back test the underside of this diamond before we continue to go down. So no one knows if patterns are going to succeed or not. No one knows. I see a pattern. It's to me it looks like a diamond. It's a bearish diamond because it's in the highs and the price has come into the diamond from the lows. But no one knows if the pattern is going to complete. And for the pattern to complete, you're going down, because that's a bearish pattern in the highs. That's a reversal pattern. If you want that, for that pattern to complete, you're going all the way down to way down. Yeah. So if you see a reaction, there probably will be a reaction on the point of control. If you come up and you see that you can't get back above the previous bull market all-time high, then this pattern looks like it's holding, it's valid, because you just can't get back into the pattern. If you get back into the pattern, then the pattern becomes invalidated, and that's actually really bullish. So you have to flip from bearish to bullish immediately. Once you see a bearish pattern invalidated, then that's bullish. Yeah, it's like head and shoulders. If you see a head and shoulders pattern and it's invalidated because the price goes down and then comes right back into the pattern, you have to change your bias from bearish to bullish immediately. Okay, because it's not bearish to complete a pattern or to break out of a pattern to the downside and then come right back into it. Yeah, that's not bearish. That's actually quite bullish. So if we do have a breakdown, I'll be looking for this area to take along, and I'll be looking to see if we can get back into the pattern or if we get a rejection from the previous bull market all-time high. And that's kind of what I'm imagining. This is just one idea. There's 1,000,001 ideas out there, but just based on what I'm seeing, this is what I'm thinking. Now, anything can change. And because the way things can change really quickly, you just have to reevaluate if you see a change. Yeah. At the moment, this is what it looks like, and it could change into something else instantly. Yeah. It's all based on price action. It's all based on supply and demand. It's all based on the markets, and no one can predict the markets. The markets are very fluid and they change dynamically. And so at the moment, this is what I'm thinking of right now. All right. So that's my BTC update. On the higher time frame, I'm still thinking ABC. Nothing's changed, but I don't know if that's your A. I don't know if the B ends here for a C, or I don't know if we have an A here and this is just the B continues, like, because you know the way it works, ABC, it's also ABC within the ABC. Yeah. So let me see how this works. Let me just kind of draw this. Let me see. ABC. I mean, this looks like a 5-wave. It's like A, B, C, D, E. A, B, C, A, B, C. It's hard to tell. I kind of think this is all one, to be honest with you. So I am actually thinking this is like an A, B, C. But then would that be an A, B, C there? A, B, C. Then what is this? A, B, C. Then you go up. I'm actually thinking something else. So when I look at the daily time frame, and it all depends on what happens, as if and when we go down, can we get back up or not? But I am thinking maybe somehow you have an ABC here, and you might have an ABC there. This is a weird one, huh? For another ABC. and then that would be your correction. That's what I'm thinking right now. If we go up, and it depends on how far up we go, because you know, you could suddenly just pump up to 80k, and we'd have to look at the targets if we do start pumping up. And then this correction is going to be really important, because how far do you correct? Do you come back into this pivot that's been put in here and then continue lower, or do you get more of a flat correction where it's like this? And that would be just as fine. You know, that would be your correction. And people are thinking we're going to correct and therefore we're going down. It's not necessarily true. Like, you just don't know how this is going to correct. Okay. I do think though, we should get a push up when Bitcoin halves. I really think that's likely to happen, because I think you're just going to get a seller and buyer imbalance in the market when Bitcoin halves. The output of Bitcoin reduces from 6 or so Bitcoin to 3 or so Bitcoin per 10 minutes. And people are going to be less likely to sell for a period of time, maybe 6 months. The miners will just hold for a little bit longer. And that's what's going to cause a rise in price, an increase in price. So I do think probably by the end of April we will go up. So we're just going to correct in the beginning of April. And the question is, do we go down now, or do we go up to go down to go up? You know, which one is more bullish? I think for higher prices, going up is more bullish if we want higher prices. I think going down is more bullish in the sense that you can make more percentage gains, but only if you're a trader, only if you're trading, because you have a really easy entry on a swing failure and then your percentage gains are higher. But when it comes to higher prices of people who are hodling, it's always more bullish to have a flat correction or an extended flat where the correction ends up in the highs. It's always more bullish. If you're hodling, that's always more bullish, because when you end up with a flat correction like that, or an extended flat, but you end up correcting in the highs, then when you do a trend-based fib target, fib pool, the two ends there basically, instead of ending down here. So you have higher targets. And so let's just say, for the sake of argument, we corrected all the way down to here, to this lower pivot. Yeah, your targets would be much reduced if we correct if the C of the ABC corrects, let's just say for the sake of argument, it corrects to the previous bull market all-time high. That's when we get our impulse. Then you can see we have higher targets. We have much higher targets. So for people hodling, it's always more bullish to correct flat. Always. For traders, they're just looking for a good entry, and for them it's always easy to enter taking a low like that. I think most traders would prefer us to go down, actually. Most traders would. All right, that is what I'm thinking about Bitcoin right now. I think that's been quite clear. I'm in a run along from yesterday at the moment. I've taken my profit from my original long, which I took from yesterday's live stream, and David took that as well, so that was good. And now I'm thinking about a short slightly higher up if I see a good reaction into this golden pocket session point of control, swing failure of that pivot, and then I'll be looking to take that down all the way down to, if I can, who knows, down here to this point of control. That would be my short idea that I have in my mind. You've got this, yep, you've got this golden pocket there, and then you've also got some lots of single prints, so volume gaps, which often offer support. There is something else as well. I wanted to show you something. And let me see how that corresponds with my target. So right now my target is the point of control. If we go higher and I take a short, I'll be looking to target the point of control, which is at 67230. And then if I show you on the CME chart, and so CME chart is a futures chart which doesn't trade at the weekends, okay? And because it doesn't trade at the weekends, so right now the CME, the Bitcoin CME futures is closed, yeah? There's always a gap. There's a gap from when it closes to when it opens. Now, sometimes there's no gap, but it depends on when it opens. So if you close on Friday here, okay, and you open on Sunday night, whenever it opens, Sunday, yeah, at 10. You see it says Sunday at 10. It closes on Friday at 8. It opens here. You end up with a gap. This is a gap, okay? And what happens is that gaps usually fill. Usually is the operative word. Usually is a high probability of filling. So as you can see here, there was a gap was created, and the price came down to fill the gap, and then the price came up, okay? It's usually what happens after gaps are formed. Now, as you can see, this gap here hasn't been filled yet because the price went up. Yeah. See, there was a gap here. Price went up to fill the gap, went down. The gapped up, came back down to fill the gap, went up, okay? Usually, gaps are filled. And at the moment, we're looking at a really big gap. Now, the interesting thing about gaps is they kind of act like single prints in volume, okay? So they fill, but then once you fill the gap, let's just say for the sake of argument, we fill this gap. If we go down and fill this gap, that becomes your support. As you fill it, it becomes support. And then the other interesting thing about gaps is sometimes, not all the time, sometimes if you can't fill it, then the gap itself becomes support. Yeah. So the question is, all right, see you, Zahid. Take care. Was it your battery low or my battery low? I think it was your battery low. Well, why don't you plug it in? But more likely not than not. More likely, if you come down to a gap, if you find support, it will go back up. But usually, you will fill it, and then you'll find support. So, in the context of the CME gap, okay, what I'm going to do also is I'm going to plot the CME gap on the other chart. Let me just quickly mark it out, just to have it, because I think it's quite important. So. And I don't know if people are aware of it, so it's always good it's good education, really. So the open was 66505. So you go back to your other Bitcoin, 66505, and I can mark it off and see where that is. It's much lower. See, it's much lower. Do I have I'll call it a gap here. And then let's go back to the other chart and get the other figure here, which is the close 63600. Right. So you can clearly see there's a big gap in the price. Does that affect what I'm thinking of now? Let me have a look. Not really. I mean, potentially you can come back and back test the gap, and like I said, it could offer support. So that's the only thing that I'm thinking of. if we get if the price does drop and it overdrops, to fill these single prints, you know, you could get a situation where you come back in to back test the gap and you just pump out of it and you don't actually fill the gap. All you're doing is just offers support. Now, if it's a big if for some reason you have, it's really, the price is really weak, there's a massive sell-off, whatever reason, there's a big liquidation event, who knows, then if you do get back into it, then it's more likely than not you'll go all the way down, fill it, it will offer support once you've filled that gap. Let's just bear that in mind. And then you've basically lost a lot of support lines. So then the trade to fill the gap would be just to long the bottom and then just take profit at the point of control. That would be the trade. That's a big if. I'm not saying it's going to happen, but if we did see it happening, then it's something to bear in mind, and then that would be your trade. Okay, to fill the gap. You wouldn't expect the gap to fill and then continue. You would expect some kind of bounce at the bottom of the gap and probably going all the way back to the point of control. That would be really bearish. If that was happening, if we experienced that price action, then more likely than not, my harmonic would be in play. If that happened, then my harmonic would be actually in play, and it would look really bearish, but actually it would be bullish because you'd be going, this is a bullish harmonic. Okay, so there's a lot of ifs, and we just have to keep an eye on the price action to see what it does and how it behaves around different areas of interest. Okay, so that's kind of what I'm thinking. BTC up, then down, then see what happens. If we get a reaction, go up. If you lose that, then go down. If we go up from the reaction, do we get back above the bull market all-time high previous? If not, we're going back down. That's kind of the areas of interest. And if we are going up, then probably we're going up. Probably we're going to the all-time high, and we're forming this megaphone. If we don't get a swing failure of this all-time high here, then there's going to be so much strength that it will just probably power through. Yeah, that's kind of what I'm thinking right now. Good morning, Fox Physique. He says, new subscriber, love your channel and analysis, keep up the good work. Man, thank you very much. Well, as I've always said, this is all speculative. It's just an idea. Anything can happen, and the plans, the trade plans that I'm creating are if I see the price behave the way that I'm imagining. If I don't see it, I don't take the trade. I'm not looking to trade willy-nilly. I'm just looking to imagine future price action, and if I see it, it does what I think it could do at the areas of interest, I will take the trade. The most important thing for me is an invalidation. I need to know when I'm wrong. Yeah, if I take a trade and I don't know that I'm wrong, where I'm wrong, then I won't take the trade. So like yesterday, I had this trade plan in my yesterday stream. I planned it out and I took the trade. Basically, I was looking to lose. Have I got it here? Probably this diamond. Oh, I've deleted the brush strokes. It's not a problem. But basically, I had the idea of coming down, losing this level, then going back up. Basically, the invalidation is this kind of, as you go up, as you come down and you put in another pivot here, that becomes, this pivot here becomes your invalidation. And as you come back up, for me, as I came back above this swing failure level here, I took the trade, because then I don't expect the price to go up and then do that. So you have your invalidation. It's really important to have an invalidation. Actually, when I'm looking in you see, hindsight is 2020, right? And when I'm looking at this price action here, I could have entered earlier if I wanted to, but I just don't like entering underneath once after we've lost support. I like to enter after we've reclaimed support. But here, if you look here, price goes down and its swing failures this low. Okay. And then that low becomes your validation. It could quite easily have continued, but at least you have an invalidation. As you see the price kind of ranging here and then starts to work its way up, then you have an invalidation. Okay, it's really important to have an invalidation. That's the thing you're looking for when you're taking trades. When you need to know when you're wrong. And then obviously you need to have a take profit in mind as well. Okay. Oh, not that one, sorry. This one here. This one. This is the trade that I took. Sorry, my bad. I was looking at the wrong price action. Yesterday, that was the trade that I took. So it went down as it came down, and now as it came up here, I took the long, and then my invalidation was here. So effectively, you're looking for situations where you have an invalidation. Okay. And I'm still in the long. I've taken my profit, and I'm actually just targeting that high there. That's your trade. Not easy. Really, it's not easy. But practice makes perfect. And that's all it is, really. You just have to practice. I don't recommend people learn to trade with their hodling account or their big amount. You're learning to trade, you just have to have a really small dollar account and practice with real money, but really small amounts, like $100 or something like that, until you get it right. That's the best idea. All right, that's Bitcoin. I don't really have more to say about that. Unless there's any questions, I'm going to move on. Have a look at some other things. I'll have a look at ETH BTC. Ooh, look at that.